Fall 7 times, stand up 8. That's an old Japanese proverb about grit and the ability to keep trying for something that's important for you. When you're applying for a loan modification, a lot of people just give up because most of the time they get denied the first time they apply. I'm going to teach you how to create a very successful loan modification application, specifically as related to your income, depending on who you are and how you make your money. I'm going to do a 3-part series that focuses on people who are wage earners, who have a W-2, gig workers, which I define as people who make money but don't have business bank statements, and business owners, who are people who have business bank statements. My next 3 episodes of Debt Law will be focused on this type of application and how you can apply for loan modification and get a successful loan modification to save your home. My name is Diego Mendez. I'm a bankruptcy, loan modification, and foreclosure lawyer here in Miami, Florida. I've helped thousands and thousands of people since 2008 during the last crash apply and successfully obtain loan modifications and save their homes. I can help you apply for yourself and teach you the ways and the tricks on how you can apply for loan modification and possibly retain your home during the coronavirus financial meltdown. So as I explained, my name is Diego Mendez. I've helped a lot of people with loan modifications, and I've seen a lot of the same errors being repeated over and over again when somebody comes to my office after they've attempted several times to apply and they've been denied. Yes, you can apply yourself and you can successfully get a loan modification if you understand the process and you understand who you are in the eyes of the bank. Now, there's a couple things you need to understand before we even get started. You cannot apply for a loan modification and get a loan modification if you're not suffering a hardship. Now, the hardship is not what I'm talking about when you're dealing with the hardship letter. What I'm talking about is being late or being in a forbearance. If you are current on your mortgage, meaning that you are paying every month, then the bank does not believe that you have a hardship sufficient for you to get a loan modification. You cannot be current and successfully get a loan modification. The only way you can successfully get a loan modification is either you are late, meaning you are at least 30 days late on your mortgage, or you are in a forbearance from the coronavirus or some other type of forbearance. When you are in a forbearance, the bank believes that you are in imminent danger of default. So therefore, you qualify for their loss mitigation procedures, which includes a potential loan modification. If you're in a forbearance right now, and you have a few months left, and you do not think that you're going to be able to pay that old mortgage payment when the mortgage hits in a couple months, you should be thinking about applying for a loan modification. The bank will accept your application, and it's possible that they will give you something to lower your payment and do something with the arrears and the money that you owe them right now. The other thing to take into account when you're applying for loan modification is that expenses only matter when they matter. And what I mean by that is that generally, and what I'm going to be focusing on in my next 3 videos, this one, the next 2, the expenses don't matter unless the bank makes the expenses an issue. The majority of banks do not care about your expenses when they are qualifying you for a loan modification. That's not to say that they don't look at your expenses and that you have to fill out the form. You do have to fill out the form, and you do have to be honest. However, the expenses themselves aren't going to disqualify you most of the time for loan modifications. Sometimes they do. The problem is you're not going to know that until after you apply and the bank tells you something about your expenses. I wouldn't focus so much on that right now, and what we're going to be talking about in the next 3 episodes of Debt Law is not so much your expenses as your income. I'm going to teach you how to create and how to analyze your income and how to input your income into the loan modification application so that you can get a qualified review and possibly get a loan modification. Now, the first group of people that we're going to be talking about in this episode of Debt Law are people who are W-2. Now, W-2 employees are people that make money in a regular job, such as if you work for a bank or if you work for a library or the government or something like that. Those people have a check that the taxes are taken out of, the FICA and the different Social Security and other deductions from your check. Those people get either a check every 2 weeks or a weekly check. Now, in order for you to determine how to do your income, if you have a W-2, it's actually a pretty simple process. If you get the same amount of money every week, meaning you don't get overtime and you have no extra income other than what you get every week from your check, then it's a simple process. If you get paid every 2 weeks, the calculation is you take one payroll check, you get the big number on top. Don't look at the net. Don't look at what you take home. That's not what we care about. What we care about is the big number. You take the big number. If you get paid every 2 weeks, you multiply that big number by 26. You divide it by 12, and that's your monthly income. If you get paid every week, it's the same thing, except it's 52. So you take the big number, multiply it by 52, divide it by 12, and that's your monthly income. That's it. It ends there. Don't overthink it. You are in the easiest group for this portion of the loan modification. Write in that amount in your application, and you're done. Now, a lot of people do overtime and do different hours. Sometimes they make more, sometimes they make less. So what I say to those people is we need to create an average. Now the bank might do their own calculations, but you need to fill in something, and this is pretty much an accurate, close to accurate amount for an average. If you get paid every week, what you need to do, what I would do in your situation, is you take 12 of your last paychecks, you add them all up, and you divide that number by 3. That would give you a monthly average income, which is something the bank will accept, because they'll probably do the same exact thing. They might ask you for more pay stubs to even have a more accurate average, but if you think that this is a pretty close to a weekly average, then you should be okay. You can do the same thing if you're a bi-weekly employee. This time you get 6, which is 2 per month for 3 months. You get 6 of your last pay stubs. You take the big number, again, same thing for the other ones. It's always the big number, not the net number, the big number on top. You take that, you multiply it by 6, and you divide it by 3. That will give you a monthly income that you can use for your loan modification application. You put that amount in the income portion of your loan modification application, and there you go. You've got your income that you can apply for your loan modification. Now, once you finish that portion, then yes, you need to go look at your expenses. You need to go through and figure out what your different expenses are. They're going to ask you your mortgage payment. You should include the old mortgage payment in that expense. Now, they'll take it out when they're analyzing you for your loan modification, but just for completeness sake, it's really important that you look at that and you do that. So that's it for now. If you're a W-2 employee, now you understand how you create your portion of the loan modification income section. I'm going to be doing 2 more episodes, so keep watching. Please subscribe to my channel. Please like this video and all my videos if you like them. My name is Diego Mendez. Again, I'm a loan modification and bankruptcy lawyer here in Miami, Florida. I've been helping people for at least 12 years with this type of law. I assist people and I understand loan modifications and how people think and how banks think and how they react to different types of applications. Please subscribe to my channel and keep watching so that I can keep assisting people with loan modification and debt issues. Diego Mendez, Debt Law, here in Miami, Florida. Thank you.